In this stock, I made 6%. So I took two positions in this stock. Each position was 2.5%. So let me first explain to you why I bought this stock, what I was looking for in this stock. So let me explain to you this yellow line, blue line, and the red line. So this is where I first bought the stock. Okay. So this is the base. The base starts from here. So if I draw the base, this is the base. Okay. As you can see, the buy point, which is this, which is comfortably above the red line, which is the midpoint of the base. The stock comes down, goes up, and starts consolidating, starts contracting. Okay. If we look at the moving averages, it's a strong uptrending stock. The blue, the green, the red. The 50-day is above the 150-day, which is above the 200-day. So it's a strong uptrending stage 2 stock. Then if you look at the contractions, let me draw it for you. So this is 0.1, 0.2, 0.3, 0.4, 0.5, 0.6. So there are three contractions. That means 6 points in the base. So my first buy point is this, the high of this candle, this red candle. So my first yellow line will be here. Let me remove this blue line. Okay. So my first buy point is this. Let's see what happens. My order gets triggered. I don't do anything because my stop loss is 8%. This red line is my stop loss. It should be somewhere here, 8% below. Next, it starts to go up. See, now it creates another buy point, right? See, if I again draw it, 0.1, 0.2, 0.3, 0.4, 0.5, 0.6. Okay, so 6 points in the base, three contractions in the base, and the contractions are getting smaller and smaller. So there is another buy point here. So I would put another yellow line here. See, this is my next buy point. See what happens next. Starts to come down and it triggers. Now the price has gone above both my buy points. So now I have 5% position in the stock. Plus the stock has gone up on above average volume, which is a good sign. This is what I was expecting. Now, where is my mental stop loss? Mental stop loss is the place where I keep on the in the base, where if the stock closes below that level, I'm going to sell all my shares. Okay. I am not going to wait for the price to come down to my stop loss. And by the way, for this position, I will keep another 8% stop loss. Okay. So there will be two lines here, something like this. So there will be two lines here. One stop loss for this, one stop loss for this. These are separate positions. So if I draw the base, see, this is the base. So now this is the upper quarter. Now I expect that once the stock has broken out, I expect the price to remain at least in the upper quarter. Either stay and consolidate in the upper quarter or start moving out of the base or start moving up the base. So this lower line of this upper quarter, this is the upper line, this is the lower line of this top quarter. This line becomes my mental stop loss because that's where I want the stock to be. So let me give it blue color. Okay. I want the price to remain in the upper quarter. So this is that blue line, which is my mental stop loss. Let me remove the base. Yeah. So as long as the price remains above the blue line, I will hang in there. I will not sell the stock. If it closes below the blue line, I will sell my shares. I will not wait for the stock to come to the 8% stop loss because a close below the blue line tells me that I am wrong. I need to accept my mistake and move on. Okay. Let's see what happens next. It starts to go up. See, now it is making nice move on higher volume. So here, somewhere here, I decided to take off my position because the red candle, high volume, some hesitation here. Okay. Although the price has closed above the previous candle close, but I thought, okay, let me reduce my risk here. So roughly 10.6% I booked here. Sometime on this day I sold the stock, so I booked 10.67% profit here. So this position is gone. One position is gone. Now I only have this position left in the stock. And I decided that since I've already made some money, let me give this more time, because this stock is coming out of a strong base. See, it comes down, comes up, consolidates nicely, very tight price action here. If I convert this to a bar chart, look, see, very tight price action here. That is why I decided, okay, let me give this some time, even if it comes to the blue line, and even if I have to sell the stock, I might end up making money in this stock because I already booked 10.7%. And that's exactly what happened. See, I decided not to sell the stock. It continued to come down. See, finally it came here. This is the latest candle. So just 5 minutes before the close of the day, I knew that this is going to close below the blue line. So I exited. So I booked a loss here. So my loss on this 2.5% is 4.32%. So roughly, let's take 4.7%. Okay. And on this position, the first position I booked 10.7. So 10.7 minus 4.7, roughly 6%. Actually, I made 6.10% on this stock. So roughly 6% is what I made on this stock on a position size of 2.5%. So that is how I played. On one position, I make money. On another position, I lose money. But the amount of money that I make on the first position is almost more than twice the amount of money that I make, money that I lose on my second position. Okay. So overall, I came out profitable. I was able to limit my loss. And this was a good trade, because if this stock had not come down, if this had continued to go up, not only my loss would have been, there would have been no loss, but my profit would have expanded further. Okay. So, and I could have moved my stop loss from here to the yellow line, but I wanted to give it some time. It could have bounced from here. That is what I was expecting, because this was a low volume pullback. So the institutions were not selling. So I gave it time. I was expecting a bounce from the yellow line. That did not happen. Plus, it closed below the blue line. So I decided, okay, that's my logical level to sell. I accept that I am wrong and I take the loss. So 10.7 minus 4.7, roughly 6% gain. Okay. So I hope you learned from this video. Sometimes when the market gives us opportunity to enter a stock 2 times, I do that. I enter twice. It is always better to take off some position, because as the stock goes up, the risk also continues to go up, right? Because now here, by the time the stock reaches here, both the positions are in profit. And suddenly, if it starts to come down, if I have not sold a single share, my loss would be double. Okay. I don't want that to happen. So I played this smartly, ended up making 6%. Okay. Thank you so much. If you have any questions, just put it in the comment section. I would love to discuss this with you.